much easier to then say, okay, what could be the type or types of financing that will fit in best for my stage? So in the first couple of stage that we call pre-seed seed, we see that usually it is the founders, then it's often family, friends, and now more and more people are saying, and familiars, because it might not be directly your family and friends, but it might be individuals that you've worked with. Those are often excellent because they know your sector, they know you, and they know that there's not much to show about your business, or even if you're a business who decides to raise money later on. That's what I did. I bootstrapped for about 3 years my own business. Then the next individuals who came in were still kind of people who knew me. Actually, many clients decided to invest in my company. Also, there's a number of types of financing at this stage that are called non-dilutive. It means that it's not types of financing where we have to give up, or where we want to give up shares of our company, so percentage ownership of our company, but they are things like grants, things like accelerators, in some cases awards that we can, business plan competitions, where they could be actually money that is given to us, or some types of loans that will or will not convert into shares. And we should never forget that for every stage of development, the best way to get financing is when you get customers to pay you on time, and to get suppliers to give you extra kind of bonus, either charge you less than they might because you're a young company, or give you longer terms to pay, because that indeed can be great ways to finance the company. When we go to the next stage of development, those that are more early stage, so usually that's when we really start having some clients where we're really able to give a bit of an element of validation market. It might not be that our whole business model is fully understood, but that's when we start coming into modes of types of financing like equity, business angels, and different types of crowdfunding. And many of the original types of financing can continue. So understanding which ones, and also what's the best sequence for your stage of development and for your type of growth. Because if you're more in manufacturing and you get pre-orders before you go manufacture, well, maybe you don't need to give shares. Maybe there's a form of working capital that's perfect for you. If you're a company that's going to have a fantastic consumer product, where actually pre-orders could make sense. Crowdfunding for pre-orders, types of crowdfunding like Indiegogo, can be a great place for you to go. Just make sure that they're all well aligned and well sequenced, because if sometimes some of these don't work, it'll be hard to get the